Hello, everybody, and good evening, and welcome to All About Markets, brought to you by Business Insider India and StockTwits India. Today, our guest is Mahrez Joshi, the head of equity research at William O'Neill India. Now, just give us a couple of minutes. We'll just onboard Yash and Mahrez as well, and we'll get going with our conversation. We have Yash already on board. So, Yash, if you could promote yourself and get onto the speaker status, and we could get started in on the conversation. So, once again, thanks for joining in, guys. This is All About Markets, our Wednesday rendezvous on everything.
Good evening, Ashwin. What's up?
And you've got on without a hitch. Good evening.
Yeah, for a change, yeah.
For a change, indeed. I think we're still waiting for Mahrez to plug in. But Yash, how's it been? How's work at the StockTwits end of the world?
No, it's great. Speaking of markets, it was a bit of a lazy day coming from the midweek break. So, not so much in terms of action, but I guess the big trigger that the markets were awaiting was the US inflation data, and it's coming better than expected. So, let's hope we see a decent rally tomorrow as well.
Indeed. And we've got Mahrez on board as well. We'll just quickly get Mahrez on to be a speaker and we can get going with the conversation. Just going to check with our moderator if we can move Mahrez to the. Mahrez, you are a speaker. Can you hear us? You need to unmute yourself and give us a holler.
Oh, absolutely, Ashwin. Can hear you loud and clear.
Lovely. You're loud and clear as well. Once again, welcome aboard. We have Mahrez Joshi, who's the head of equity research at William O'Neill India. Thanks again for joining Business Insider and StockTwits, Mahrez. Pleasure to have you on board.
The pleasure is all mine, Ashwin. And thanks, Yash, and thanks, StockTwits India as well.
Lovely.
All right, awesome. I know everyone knows, by the way, everyone knows Mahrez because we see him all the time on TV. But just to give you guys a quick little, intro about Mahrez. So he is, like Ashwin mentioned, he's the head of equity research at William O'Neill. Prior to joining William O'Neill, Mahrez had a 12-year-long stint with Angel Broking as senior vice president, head of portfolio management services. Mahrez has also worked as a financial analyst, investment banker, wealth manager, and portfolio manager for almost 16 plus years, and has an extensive experience in the field of investment banking and portfolio management. So, quite a big voice to get, and rightly so. It is an interesting point that we are at Mahrez. Sharp recovery. But before we talk about markets, quick reaction on the US inflation data that has come out just a while back. 8.5% for July versus estimates of 8.7%.
Hey, thanks for the introduction, Yash. Yeah, so I think numbers far better than what the estimates were. So I think against 8.7, a reading out 8.5. I think this is what the markets probably are liking at this point of time. Now futures already 400 points up. Nasdaq futures are up. European markets have recovered, and SGX, which is a barometer, right, for all we do after markets close, is up 100 points. So yeah, the markets are celebrating to a softer inflation number.
No, that's one good bit. And indices here in India also have had a rebound over the past few months. Do you expect this momentum to continue? And where do you anticipate any resistance levels, if any, Mahrez?
So Ashwin, I think two things. At O'Neill, we've got a very unique system of mapping data points that the market throws at us. And we obviously got a system of mapping any weakness in terms of market tops in terms of distribution day count. So at this point of time, ever since we've hit 15,200 in this down cycle, and then the recovery thereof, the distribution day count stands at 1. So for guys who are not aware, Ashwin, the point is very simple. I think a distribution day is nothing but where the index corrects 0.2% or more, 0.2% or more, with volumes more than the previous day. So if there is a bunch up of distribution days that happens at the index level, 4 or more, we probably downgrade the market to an uptrend under pressure, which means there are inherent signs that the market is throwing at us in terms of topping out. And that is then getting exhibited at the second tier in terms of certain sectors or most sectors probably witnessing the same D-Day count and resistances at higher levels as well. And then it comes to the individual stocks within those sectors as well. So if you look at the three-tier structure at this point of time, the D-Day count on Nifty is at 1, which is far below the threshold of 4 in a cycle of 25 days as we count it. Some sectors are showing elevated D-Day count. We'll speak about that later.
Okay.
But I think the markets probably seem to be in a fine fettle right now. So I think the momentum probably continues for our markets.
Lovely.
Mayuresh, I have a follow up to this. I know you talked about the distribution day count and stuff, but a lot of retail investors who maybe timed it you know uh, worse and got in at in January of 2022 or in late 2021, they're sitting at losses and they're probably seeing their portfolios now break even or get to a slight positive or a minor gain. For them, is this just another bounce or a bear market rally, or could we go on to hit new all time highs and this is just a short term correction within it?
So, Yash, very interesting you asked this, and I'll answer your question on two counts. One, in terms of whether it's a bear market rally or not. I
Hmm.
think it's only hindsight that we'll probably know about this. But I think it's very interesting in terms of even the US markets, and you map the Indian markets against that. So, what we had studied right from the 1970s till 2021, the COVID crash as well, in all the bear market phases that the market has gone through for the US region as a whole, we've seen 16 strong bear market rallies. Some of these rallies have been in excess of 14-15% as well. And therefore, I think the data points become extremely important at this point of time. Now, when you talk about certain data points, Yash, I think if you look at the core inflation, the headline number has obviously come at 8.5, but a lot of advanced economies, the core inflation is still hovering around 5 odd percent. Now, gas and crude prices
Yeah,
have
it's
come
at
off.
5.9. Right.
Yeah, yeah. So I think gas and crude prices have come off, and because of that, what you're probably seeing is some moderation in terms of the wallets, or ease in terms of pressure on wallets for consumers as well. So again, I think in India at this context, when you probably talk about how we are placed, and I think a lot has been spoken. I don't want to go into the exact data points from a macro perspective, but we are strongly placed to the emerging pack. We are strongly placed in terms of how corporate earnings are growing at this point of time. And that is clearly getting reflected in terms of even the mood from the FI perspective in terms of the buying figures that are coming every day. So, yes, I think bear market rallies are very sharp. Whether it is a repetition in terms of what we've seen in the past, and if data points worsen from here for any factor which is unknown, the risk factors obviously stand in terms of an escalation of China, Taiwan at this point of time. If that happens,
Hmm.
what happens in the winter period? If gas supplies probably get curtailed for the European region as a whole, with the ongoing Russia-Ukraine tensions already on. Because very interestingly, the Shell CEO Yash had pointed out. There will be or might be concerns, and winter
Hmm.
might be a very, very bleak one. So you might have to look at that. But at this point of time, as I said, I think in the fine petal. Obviously, I think what we've studied at O'Neill on the second part of your question, that
Hmm.
every bear market and when a new bull market probably starts, so there is a new set of leadership that probably emerges. So I think retail investors have to be cognizant that the old set or the old leaders or sectors which had leadership in the previous bull run might not be leading the next bull run, and there might be a different set of leaders which actually might be leading the next rally as it comes.
So
It's
Mayuresh, minus any black swan event, we could possibly see a new all time high by the end of this year. Just being cautiously optimistic.
I think fingers crossed. I think everybody's hoping for that. Yes, yeah. So I'm in the
you know,
same camp.
you just said, you expect a new set of leaders. What are the sectors that you expect these leaders to emerge from? Any hints, any thoughts out there?
Yeah, so very interesting, Ashwin. I think what we've studied at O'Neill and what we are looking in terms of historical data points, looking at our rotational charts in terms of earnings, both from a top down perspective, how the top line growth is, how the margin performance is, and our bottom line growth is happening along with institution holding as per our Cancelim approach.
Hmm.
Two, three sectors are standing out. So one, I think financials are now clearly coming into the outperforming segment. The second element that remains is energy and utilities because they remain extremely strong at this point of time, and consumer cyclical. So I think we've always spoken about the capital or the capital expenditure theme in India, the capex that the government is embarking upon, and
Hmm.
therefore this domestic capex-led theme also shows signs of an inherent growth going forward as well. So rolling forward, I think over the next 26 weeks, these three sectors might actually stand out. Ashwin.
Lovely, thanks for that. And I just want to draw your attention to MF inflows. They're still tepid in spite of the indices faring reasonably well. How are you reading this?
I think so. It's an obvious reaction. I think what we've seen in the past as well, when such reactions happen into the market and the kind of correction that we've seen, there is some sort of apprehension that starts coming out. But surprisingly, Ashwin, I think the retail investors has held the ground this time round. I think you might see retail investors actually putting forth a very strong show when
Mm-hmm.
it comes to the monthly sips as well. So I think the retail investor is now far more mature over the last few years. And the retail investor is now cognizant of the fact that if he's here, he or she for the long haul, I think
Mm-hmm.
such corrections are part and parcel of the longer investment journey.
Okay, that sounds good. Yash?
Mayuresh, I wanted you to come in on these new age businesses, Paytm, Zomato, Nykaa. They've seen a sharp 35% reversal from their May lows. Now, this perfectly coincides with what we are seeing in the US tech stocks as well. Do you, by any chance, like any of these names, even from a trading point of view, or are they complete avoids?
No, I think it's a complete avoid for two reasons, Yash. I think one, the model itself. A lot of these new age companies, and not all of them are loss making, but I think a
Hmm.
lot of these new age companies are obviously a very high cash burn business. So I think the
Yeah.
more it's like a funnel, right? जितना ऊपर से डालोगे, कुछ तो आना चाहिए end में, but nothing comes out. So I think if you're looking at a bottom line growth, I think it's very difficult for these new age businesses to probably exhibit that. Yes, I think commentaries surrounding that in terms
Hmm.
of second half 23, first half 24 recovery seen on EBITDA or bottom line. But let those numbers start flowing through, I think, consistently over 2, 3 quarters, and let us have the confidence that they're actually shrinking the losses on their bottom line. And the second part, again, I think, in terms of both the valuation matrix as well as the key aspects in terms of the expectation largely built around the return that can come through for these stocks vis-a-vis the existing companies that are already here for a long period of time. So I think businesses will adapt. Businesses are going to change over the next few years. Some of these businesses can do phenomenally well. So I think it's a punt that we're probably taking at this point of time, if any, on new age businesses as a basket. I think one or two businesses might turn out to be huge winners in the near future. But I think most of these businesses might struggle, as I said, in terms of the cash burn that they have and the cash losses that they probably
Listen, I want to
Okay,
talk
so
about some
clear
of.
avoid even from a trading point of view then.
have. Trading से थोड़ा बहुत हो सकता है, but I think
Mhm.
more, I think I think, but I'm not too sure about that.
Okay.
Yep. For all those of you listening in, quick thank you for joining us. We are chatting with Mahrez Joshi, the head of equity research at William O'Neill India. And if you guys have any thoughts that you'd like us to surface and bring up to the conversation, you can drop Yash or myself a DM, and we'll be happy to bring it into the conversation. Once again, drop Yash or myself a DM, and we'll bring it up into the discussion. And Mahrez, I want to talk about these age-old companies that you just mentioned, who are trying to do new cool things. Reliance setting its eyes on green energy to make it affordable. The Tatas are also transitioning towards sustainability, across their entire businesses. What does this mean in terms of disruption in the space? And should Adani, slightly be worried, considering green is one of their primary businesses?
So to answer that question, again, I think there is a huge potential for all these businesses as well. The kind of capex that Reliance, as an example, is putting into the green
Mm-hmm.
hydrogen business itself, I think the long drawn results are going to be phenomenal. The only aspect that one needs to see and observe is that a lot of capex will be front loaded over the next few years.
Right.
Kind of capex front loading, the kind of depreciation for the plants coming up is obviously going to take a hit in terms of near-term margin performance. But renewables as a space, I think, is going to be one space that not just India, I think the whole world is probably looking at. So the targets that have been set for 2030, 50, 70 by governments across the globe, by a lot of companies who are probably looking at cutting down carbon emissions as well, and
Mm-hmm.
therefore ESG score that probably props up on a lot of fund managers' dashboard. I think that is going to be very key. Just have a look in terms of how our own companies are probably evolving. So, as an example, Ashwin, I think if you probably look at cement companies, right?
Right.
These companies are now talking about having renewable energy. and they're pretty serious about that in terms of installations probably going through at this point of time. So I think any of these businesses which are high capex, which probably have high polluting component to that, even they understand are cognizant in terms of the ESG metrics and probably getting to these targets. So I think it's a huge space. Reliance has probably earmarked a huge amount of consideration for this. Adani, pretty sure in terms of their targets as well. And therefore, I think renewables as a space will have a lot of components within that. But this is one space that will be there on long-term investors' radar as well over the next few years.
Lovely. Thanks for that insight, Irish. Yash?
Just one small update, guys. So for those who have sent in the request to be added as a speaker, we will take your questions towards the end of the session. So probably another 10 to 15 minutes. So hang in there, and you will definitely get your chance to ask Mayuresh the question. But coming back to the conversation, Mayuresh, chemical stocks, they are back in high demand after a dull first half. I know you track the space very closely, and I know you like it as well. What is your preference order or your pecking order from the chemical sector?
Oh, again, the China plus one theme had worked wonderfully well during the COVID period. And again, I think this theme has not died out, because if you probably look at a lot of management calls and transcripts, a lot of customers, whether it's in Europe, in North America, are probably looking at sourcing outside China as well. Now, a lot of chemical companies within the Indian context are also niche players in terms of applications that they do. Example, I think if you look at Chemcon's number, yes, yesterday, I think a fabulous set
Yeah.
of numbers that they posted. Tata Chemicals had a very good set of numbers that they posted as well. So there are all these niche chemical companies which are doing the right things at this point of time. They also understand the importance in terms of backward integration, because some of these companies have a huge amount of dependence in terms of China, and that is where I think a lot of their margin impact probably happens. But sourcing from other countries at this point of time, creating their own supply chains as well, is going to ensure that the kind of raw material supply that they probably need, and the niche products along with the value added products that they can give to the end customer, where the demand obviously is going to remain very strong, is going to be very important as well. Now, few of these chemical companies also have their inputs as outputs, and therefore I think the mix within this space is very important as well. Case in point, I think if you probably look at Deepak Nitrite, right, and the phenolics business, it's a clear case of import substitution that is probably expected to happen. You read through in terms of Megmani's con calls, both Finechem and the other firm as well. I think the aspirational targets that they probably put for, and the kind of value adds that they're probably expected to bring on the table, is relatively huge. In terms of numbers that probably came through, again, I think chemical as a space and specialty chemicals within that, very interesting space. So I think I remain optimistic on this space. A few companies might be laggards again here, yes. I think because what you probably need to also understand is that generic based application chemical companies might actually struggle in terms of competitive disadvantages that they probably have, both locational as well as the end product usage as well, because of the excessive supply that probably comes through. So I think hunting in this space for niche companies, and a few of the companies that I mentioned have these niche applications and spaces within them, they can do phenomenally well over the next few years.
Absolutely. And also, with the raw material prices cooling off, I think now margins are expected to improve. They had been trending down for the past 4 or 5 quarters, and which was also one of the main reason for the weakness. And obviously, a lot of these names, after the weakness in the first 6 months, have started to look attractive on a valuation basis as well. So maybe that is the reason that explains the strong earnings, attractive valuation, and the whole business outlook that you mentioned, uh, fueling the rally in chemical stocks. Ashwin?
Yeah, thanks for that, Yash. Mayuresh, want to draw your attention to passenger vehicles. Now, PV seem to be having their time in the sun. Demand seems good. There's some vehicles which have like ridiculous waiting periods of 50, 55 weeks. Now, prima facie, this should be a reason to feel bullish. How are you reading the space?
No, so I think the autos has been an outperformer, Ashwin, very clearly over the last few weeks. I think two things. One, I think the market a couple of quarters back was going into auto numbers being a little bit on the slower and lower side
Yep.
because of the semiconductor issue, as well as fuel prices going up, which probably deters first-time buyers sitting on the fence to probably defer their purchases as well. But with both these aspects, what we're hearing from managements in terms of semiconductor issues cooling off and coming off, and being far better, and second half being far uh, relatively better in terms of what we probably witnessed, and fuel prices coming down, which probably means that the operating expenses and the lower running costs for end consumers coming down become positives as well. Now, the joker in the pack, Ashwin, is obviously going to be how China and Taiwan escalations probably happen. Because if that happens, I think the semiconductor
Conductor
industry.
problem will come back into the fray. Yes.
I'm audible, right?
Now
Yeah,
you
yeah.
are. Yes. I think we lost you for just about a moment. Yeah.
Sure. Yeah, so I think if those escalations happen, being one of the largest semiconductor manufacturers, I
Hmm.
think that is an outside risk factor for autos as a whole. But generally, I think the demand, as you pointed out, Ashwin, I think the waiting periods have been huge. I was just reading a report in terms of high-end cars as well, and the high-end sports cars and the high-end utility cars as well. The demand has actually gone up significantly in the last couple of years in the Indian context as well. So the demand is extremely strong. Strong waiting periods for a lot of these models that have been rolled out, whether it's M&M, whether it's Maruti,
Hmm.
whether it's Tata Motors. But whether the lines in the next few months in terms of semiconductors, and as I said, if nothing goes wrong with the supply chain, actually ensure that these lines are able to satisfy the consumer demand, I think
Yep.
auto companies will be in a good stead. Yeah, so I think the momentum continues for them. M&M clearly has been an outperformer.
Yep.
But a few of these auto ancillaries should also be kept on your radar.
Yep. Absolutely. Yash.
Mahesh, Independence Day is next week, and we all know defense will be one area where we may hear something. Do you like the space, and what are your top picks from the defense sector?
Yeah, so the space is attractively placed. I think the kind of orders that can come through are expected to be pretty huge. Second, I think in terms of the government initiative itself, to give a lot of support and order flows to Indian companies under the Atmanirbhar Bharat Abhiyan, I think that is going to aid and abet a lot of these companies under consideration as well. So yeah, I think very interesting space. Yash. Orders books for a lot of companies, whether you talk about BEL, whether you talk about BDL, whether you talk about Hindustan Aeronautics, are reasonably placed in terms of revenue visibility over the next 2 to 3 years. Again, as you pointed out, like in the case of chemicals or any other sector at this point of time, input costs obviously a little higher side, but they should start moderating as a lot of uh, deflationary factors have started playing out, and as they start stacking up inventory at lower levels, there should be significant margin improvement happening from Q3 as well. Some of the niche application for defense also depend on semiconductors, and as that issue starts getting resolved as well, I think those niche applications for a few of the defense companies should also start easing out. So yeah, like the space, I think we do like Bharat Electronics. It's part of our model portfolio, so that's clear disclaimer from us.
Cool. Mahesh, monsoons this year have been a bit erratic. Any cautionary thoughts from your end on this?
So yeah, the distribution has been a little bit erratic, as you rightly pointed out. But I think the hope still remains. It's a month and a half still for the monsoon season to probably get over. So let's hope that the next month probably the distribution happens more widely spread
Hmm.
than anticipated. But I think this calls for two things. I think the risk factors from here is more important to be seen, because if the distribution spread is not that even over the next month and a half.
Hmm.
I think a lot of the rural facing sectors might feel some amount of pain, because the expectation largely is that the Kharif output should be reasonable this time around, with MSP prices going higher and the expectation of the central government announcing more on this front. The rural incomes probably should get a lot of support on that. But if it's not evenly spread, specifically in the rice bowls or the northeastern belt, as we call it, uh, then there might be some issues in terms of discretionary spend. And therefore, I think those risk factors, specifically for FMCG companies where rural demand and rural spending is an integral part of their entire business model, I think that might come under some element of risk. So yeah, I think the hope is that it probably is still a month more for the monsoons. If it gets evenly spread out in that period, I think that risk factor also goes off the table.
We'll check back with the same thought after a month.
Awesome. Mayuresh, I have a couple of questions from the listeners. So, Karthik wants to know your view on the AMC space. Now, I know AMC stocks, they did not participate at all, even when all these other brokerage stocks were going up with, the whole retail investing slash trading boom. We all know the number of demat accounts which are open to apply for the LIC IPO. But now that even though the tide has turned, they're still not showing any signs of bottoming out. What's really gone wrong over there, and how do you see the space?
So I think two aspects. One, I think the entire boom in terms of the demat account being opened, in terms of the kind of turnover that we've seen on the exchanges itself. I think the clear beneficiaries got played out in terms of the CDSLs of the world, the BSCs of the world, and even the brokers. For AMCs, I think a large element in terms of their product mix itself, both in terms of their equity and the debt portfolios that they manage. I think the element that came through was that the compounding growth that one really saw a few years back or a few quarters back on a high base was not getting replicated. The second element is the model itself for a lot of AMC companies, because they've been in this business for a long, long period of time. A large part of their expenses obviously have got front loaded. So as more and more AUM starts coming to their fold, and as it continues at this point of time, logically, I think the operating expenses do not grow in the same proportion as the AUM grows. But a large element in terms of the commission, stroke operating expenses, and ultimately the bottom line growth that was getting exhibited was not in sync in terms of the expectations that investors had from the market. Couple that up with what has probably happened over the last few months in terms of the controversy surrounding industry as well. I think that is not boding well as well. So I think price strength clearly not there, even at this point of time. So as I said, within the financials, as we see it, within the financials, larger banks, a few of the larger NBFCs look nicely poised at this point of time. Energy utilities, and a few of these domestic capex oriented themes. So I think AMC still become a miss on our part.
All right. There's one more question coming in from Dinesh Reddy. It's a very stock specific one. He wants to know your thoughts on Natco Pharma. Why did the stock fall today despite giving good Q1 results? Any reasons why? Have you been able to look at Natco's results?
So very frankly, not seen the results. There were too many numbers coming in, but I'll get back to you on this.
All right, cool.
Mahesh, just wanted to pick your brains on are there any sectors where you think there's a fair amount of froth and there could possibly be some rationalization in the coming quarter?
So obviously, tech has seen, Ashwin, a large amount of price correction that has been going on over the last few weeks and months.
Mm-hmm.
Retail is one space which, in our opinion, and as per our sectoral analysis, is actually coming into the weakening quadrant. I think two aspects coming through here. On a global scale, we have probably seen a lot of revenge spending coming through, whether it's revenge tourism, it's revenge eating outside, so on and so forth. So I think retail spending has gone through the roof, whether it's the globe or even in India. So I was actually looking at weekend bookings just because we track the hotel sector so very closely, and some of the rates for some of the properties are through the roof at this point of time. You
And
look at
even Oberoi and Tata's have, the IHCL have good results as well. So
exactly. And you look at the end of season sales, because I love doing all this in terms of practical research. I went to the Shopper Stop end of season sale. I went to a couple of malls to see how the sales have been going and picking up. And the sales have been pretty decent and reasonable. But what really happens is that when the fear probably starts coming through, and the fear should largely be resting on the fact whether there is going to be an economic slowdown and an earnings slowdown that the markets will witness, and if the markets probably just go into a time-wise correction at any given point of time over the next few months, uh, any slowdown in any given sector or industry as well, and therefore the discretionary spending patterns start actually coming off.
mhm.
So if that probably starts getting exhibited, our own sense is that retail stocks have outperformed to a large extent. They might actually go through some element of time-wise correction at this point of time. So again, I think tech might largely underperform even now, and retail might go into a time-based correction.
Got it. Thanks for that.
Mayuresh, last question from my side, and that is on paper stocks. Again, similar to chemicals, we saw all of them report, solid Q1 results. West Coast Paper, Sesha Sai Paper, JK Paper, all of them were up 15-20% in the past week to 10 days. Is there more room on the upside for paper stocks?
The momentum can very well continue here. So I think two things happening here. One, I think if you probably look at the paper industry size itself, around 17 MMT expected to go to 24 MMT over the next few years. Now, the basic components of this phenomenal rise from 17 to 24, obviously, I think printing and writing is going to be a substantial part, but packaging and cardboard is also going to be a substantial and a huge element in terms of the incremental additions that are probably going to happen, both from a supply and a demand perspective. The second aspect that probably is abetting all the move is also the ban that you're probably seeing in terms of plastic and usage of plastic. You've obviously seen a lot of aspects in terms of the value added products as well. And the third element in terms of backward integration of their operations have played out on their numbers in a very, very positive fashion. So I think phenomenal set of numbers, JK, Andhra, West Coast. But if you try to analyze paper companies and go right up to the bottom of the pack, the top three, as I mentioned, JK, West Coast, and Andhra, are the most integrated in terms of both raw material requirements, both in terms of what is required for their needs, and also in terms of the balance sheet size or the balance sheet leverage that they're probably carrying at this point of time. JK is extremely well suited in terms of having writing, printing, cardboard, so on and so forth, which the other two probably lack, but they're adding capacities there as well. So yeah, the momentum can very well continue. Offices have opened up, schools have opened up. But as far our logic is concerned, I think if you're probably holding on to these stocks, please trail and look at the 50 DMA in terms of a breach, because if some breach happens on those levels for any of these stocks or the sector as a whole, there can be significant correction that can probably happen. But till that point of time, I think these top three names look good for further momentum going.
Awesome. Mahesh, will quickly open the floor for any of the listeners if they have any questions for you. We already have one request, so let me quickly add Srinath as a speaker, and all those who have questions, please send us in your requests. Because of time constraints, we will stick to only one question per person. Um, yeah, Srinath, you've been promoted to speaker. Go ahead and ask your question. Please avoid, seeking any targets or very stock specific questions.
Srinath, you're live. You can go ahead.
Yeah, you're on mute now. Okay, I guess there seems to be some issue with his connection. Anyone else, if you have a question, you can send us in the request, or you can message me or Ashwin as well, and we'll be more than happy to take it.
Hey, Mitesh, you are on the chat, so you can quickly ask us your question. Please introduce yourself very shortly, briefly, and then. Mitesh, you need to unmute yourself, please.
Guys, if you have possibly joined from your computer, you wouldn't be able to speak. You will just be restricted to as a listener. So please ensure that.
I think we've got Guru on. Hey, Guru.
Yeah, hi. So I just wanted to understand the IT space where having a channel Taiwan in the place where we are today. So how does it IT sector get impact specifically if I mention as an Apple kind of stocks?
Hey, thanks for that, Guru. So, two things. One, I think our IT companies are basically outsourcers. So, I think we are not product or platform based companies like our counterparts in the US, which probably might get impacted in terms of discretionary spending going down. So, because we are outsourcers, I think any industry that probably needs automation, cloud computing, so on and so forth, we can cater to those needs in terms of the ready made solutions that we've got or create solutions for them. in terms of optimizing their needs in terms of a solution that they need, both from a cost and a revenue perspective. So in that sense, we are very, very different in terms of the margin performance because of the high attrition rates that the sector and the industry is going through. And we've still probably seen that in the results that have gone by, though there has been some amount of moderation and margins have shown some amount of respite. The second element obviously was that if there is a hard landing or recession probably hits the US markets or the European markets very, very sharply, is there going to be a U-turn in terms of order flows that probably happen? What we've seen to counter the question here itself, over the past decade, IT spending is now considered to be an integral part of most corporate balance sheets. Unless we have a hard landing or we go into a very, very difficult phase globally, to have IT budgets cut substantially is probably not going to happen at this point of time. So I think IT budgets will still continue. The third element, obviously, is in terms of the overall dynamics on the balance sheet itself, whether they'll probably be able to maintain their constant currency or dollar revenue growth, which obviously has got restricted because of the other currency exposures that they've got. So dollar depreciation obviously acts as a tailwind, but the other currency exposures also offset that effect as well. So I think these three factors are largely playing out at this point of time. Obviously, I think all these stocks from a price perspective and a price strength perspective, as O'Neill is concerned, have got beaten down quite significantly. So our own sense is that a quarter or two down the line, as we probably get more clarity, because as Q3 approaches, which is typically a very weak quarter in terms of Christmas holidays, so on and so forth, Q4 is the deciding quarter for a lot of these companies under consideration in terms of IT budgeting spends. So I think it's too premature to call whether a lot of corporates across the globe are going to cut their budgets or not. As I put forth my argument, very unlikely that substantial cuts will happen. Therefore, I think let's wait and watch on strong bases being created, but look out for the stronger names within these sector as well. So I think the Infosys or the TCS of the world is probably something more comfortable. Mid cap IT, very, very selective. A few stocks like Tata Alexa, LTTS have done phenomenally well, but they're in their late stage basis, which means they might be subjective to a huge amount of profit booking if the tide turns in terms of spending as well in the next couple of quarters. So I think stick with the leaders, whether it's the large cap or the mid cap.
Awesome. And we also have Advait joining us from Australia. I believe it must be past midnight. Advait.
Yeah, hi Yash. No, I'm in India for a short while. So thanks for the opportunity, Yash. It's a wonderful, very focused spaces session and amazing insights, Mayuresh. You have been always been with so much of inputs. Mayuresh, my quick one on since we were discussing IT. So the depreciating rupee obviously has its advantages to the exporters like IT, chemicals, pharmaceuticals, and textiles, the four sectors that I was looking at. Unfortunately, these sectors have been a bit laggard for the last 6-8 months. I believe due to recession issues and obviously the logistical issues with chemical and pharmaceuticals as well. But Mayuresh, what are your insights on going forward? These four sectors, how should we be looking at them?
Yeah, thanks for that, Advait. So two things, as I said, for the IT sector, I obviously gave my views. I gave my views for the specialty chemicals as well. Textiles also is a very, very interesting space. So I think what the government has probably done in terms of further incentives that have probably come through for the sector as a whole. And this becomes very, very interesting because I think the kind of incentives that on a similar note that got rolled out for electronics in terms a few years back, almost a decade back, the kind of exponential growth that we saw in exports over the next few years because of the incentives laid out as a precursor in terms of abetting growth for the sector as a whole was phenomenal. So for the sector, for textiles as a sector, I think it's a pretty phenomenal scheme of things happening. Now we are competing with players in Pakistan, Bangladesh, and China as well when it comes probably to the end product use, and probably also depends in terms of a few of the duty impositions that have happened. Some leeways obviously have been given to Pakistan under the free trade agreements and Bangladesh as well. So to that extent, I think we've become a little bit more expensive when it comes to pricing. Obviously, cotton pricing, where cotton prices were at this point of time, were on the elevated levels as far as Q1 is concerned, maybe high cost inventory in Q2 as well. But cotton prices have softened up quite significantly as well. From Q3, there can be a huge impact in terms of better margin realizations for these companies. At this point of time, from the channel checks that I have done, what I've visited in terms of a few hubs as far as the textile market is concerned, some concerns on the inventory built up at this point of time, some concerns in terms of input costs, some concerns in terms of margin compressions, but I think they would be short-lived if you are if you are a long-term investor as well. So to that extent, some pain over the next couple of quarters for the sector as a whole. But I think the entire China plus one theme, Advait, for textiles, for specialty chemicals, should play out over the next 4 or 5 years. So I think integrated companies in these two spaces, in my opinion, can do phenomenally well. So look at the con calls as an example of Gokuldas for KPR Mills. I think they've been exhibiting some risk elements, but I think the larger picture probably remains very, very buoyant for the sector as
well. Excellent, excellent. Thanks, Mahesh.
I'm happy with this machine, man. Hey guys, can you hear me?
Yes, loud and clear. I also think we've got a bunch of questions that are coming in. I'm just going to quickly go through them. Insurance sector, we have Sajid asking in. Mahrez, do you want to quickly opine on that? He's saying for the last 2 years, I'm hearing that possibly that it is good for investment, but it is not performing. How are you reading this, Mahrez?
So clear underperformer as a sector, and then we actually got frustrated with HDFC Life as a disclaimer. That stock actually did nothing for a long period of time. So I think what is largely happening is in the COVID wave, I think people realize that getting insured and having the right amount of insurance is going to be key going forward. However, I think most of these companies also got hit because of a lot of COVID claims that hit their balance sheet. And therefore, I think the growth that probably it was expected to come through got delayed by a few quarters. The second element, like the AMC companies that you're talking about, most of these companies have been in operation for a reasonably long period of time. And therefore, I think the entire operational cost element has been embedded in terms of numbers as they were building up their AUM as well. Now, a lot of these insurance companies have built in reasonable amount of AUMs. And therefore, I think any incremental growth that comes through seeps directly through on the EBITDA and the bottom line as well. Third, I think it's a business where I think most companies will probably not enter. So I think the entry barriers to these businesses are also pretty strong because they are long gestation businesses that any company or any corporate will probably need to invest in at the onset. So you've seen a few players come in, but they are really struggling in terms of volumes, the entire distribution network, so on and so forth. The fourth of all the parameters that you probably look about, and if you look at the distribution network, all of them have got fabulous networks, distribution network, whether it's an SBI Life through their parent, ICICI, HDFC. And therefore, I think the product mix becomes extremely important. I think what kind of products are getting sold through. And that is where LIC is lagging at this point of time. Very unfortunate. But I think the kind of protection plans that they probably need to get in, and they're hopeful of having more digital offerings on these products as well, would ensure better value of new business margins, better cash flows, better embedded value, better balance sheet, and better solvency ratios. So, in a nutshell, underperforming sector at this point of time is the prospect brilliant going forward. India as a country, highly underinsured. As things improve going forward, this sector might do well. But at this point of time, I think clearly the price strength lags for this sector. We want the price strength to improve for a few players. SBI Life probably looks better placed among the pack at this point. But generally, I think the others need their price strength to probably improve. Yeah, but a very, very interesting space over the next few years.
Thanks for that, Mahrez. And I think I want to end our conversation on some good spirits. Dr. Vaibhav Patak saying hotel restaurants reporting phenomenal results. What is ahead for spirit stocks? I think Mahrez just fell off. If we could just have him quickly come back into the conversation, requesting our moderators to quickly promote Mahrez back into the speaking cohort. Just give us a moment, guys. I think there has been a tech glitch because I know Yash was telling me that he's having a bit of hiccups. And
yeah, I still can't hear you clearly.
Correct. Okay, Mahrez is back. Hey, Mahrez, can you hear us?
Yeah. If you can repeat that. Sorry, I just...
I will. I was just saying that we have a question from Dr. Vaibhav Phatak, who's essentially saying that with the hotels and restaurants doing all right, what is ahead for spirit stocks?
I mean, you not necessarily need to depend on the hotel stocks directly, but generally, I think it's a Wednesday, not a Friday. But yeah, the spirit companies, whether it's USL, whether it's UBL, decent set of numbers. Obviously, they've also got impacted because of higher input costs. So I think the ENA prices, the prices of molasses have obviously been on the higher side, but they should start moderating as things have become far more better. In terms of supply chains and input cost deflation coming through. Volume growth has been reasonably good. Restaurants, hotels opening up. The doctor is right. We're probably seeing far more volume growth happening at this point of time. A lot of these companies have also asked for price increases through the state government approval process. And therefore, I think a volume-led price growth will mean operating leverage happening onto their balance sheet as well. Price strength, obviously, a little bit on the lower side. So to answer the question the other way around, I think we actually are liking hotels as a space where we believe they can do phenomenally well. I think some of the rates that I was speaking about for this coming weekend and a lot of weekends going forward, I think are looking very, very good. Corporate travel has started back. Hotel companies have reported fabulous set of numbers. And obviously the F&B within the hotels where you serve liquor as well as good food obviously augurs well as well. So I think other way of looking at it is the hotel space itself where we are very, very optimistic.
Awesome. Mayuresh, the last question from one of our listeners, Krish, is your view on API industry. I remember a couple of years back when, when the first wave of COVID happened, everyone was loading up on these API names, and now all of a sudden, they've been just completely shunned away, or the interest is so low that no one talks about it anymore. What is happening with these companies?
No, so again, I think it's a very interesting space, and you're absolutely right. Yes, I think there were darlings a few quarters back, and certainly on the space, the difficulty in terms of raw material sourcing, which obviously was a big sore point for these companies, started hitting both the gross and their EBITDA margins as well. But generally, I think if you're probably looking at the API, the CDMO, or the CRAM space, I think the innovators are probably looking at these companies in a far more holistic fashion. The second element is the kind of numbers that can still be expected over the next few quarters and years can be reasonably placed with better margin performance coming through. A few of the companies, including Laurus, including DVs within this space, have actually done a reasonable amount of capex as well. They're doing further capex as well, very, very selectively in terms of upping their capacities. And therefore, I think the value add products that actually come through in terms of the API with better margins should hold out their earnings and their EPS estimates for the next few quarters and years in good stead. So, yeah, I think with input costs going down, with new capex coming up, with utilization levels picking up, with more business expected from innovators, I think the earnings trajectory should start normalizing and improving going forward as well. So, yeah, I think the couple of names that I just mentioned within this space look interesting for the medium.
All right. Awesome. So I guess with that, it's a wrap.
It is indeed a wrap. I think we've taken more of Mahrez's time than we had blocked on his calendar. So thank you so much, Mahrez. Really appreciate you staying back and chiming in on all those opinions and thoughts that came in from our listeners.
Thanks, Ashwin. Thanks, Yash, for inviting me. I think I hope I made sense, and thank you for all the listeners for tuning in.
Absolutely. Lots. We look forward to having you back.
Thanks, guys.
And in case any one of you just joined late and missed any of Mayuresh's answers from before, you can go ahead and check out our Twitter handle. It will be the first pinned post. And we highly recommend you go and listen to Mayuresh's take on markets, individual sectors, and tons more. And just a quick reminder, we do this spaces every Wednesday. So if you're new, don't forget to follow us and sign up to the Daily Dip India newsletter to stay up to date with markets.
Yep. Thank you so much, guys. Have a great week.
Bye. Thank you.
Bye, guys.